Welcome back to another episode of T2 SMC Trader, guys. So in this video, we are going to learn the price action. Watch this video carefully until the end and it will help you to understand the price action. Without the price action, if you would love to be a consistent profitable trader, that is nearly impossible. So make sure that you understand the whole concept over here I'm gonna explain. At the same time, if you are new to my channel, don't forget to subscribe to my channel and don't forget to give me a thumbs up. So let's go to the video. Today is 2nd July 2024, Tuesday. So this is the Tuesday price action, and if you watch this candle, this is the end of the PM sessions. It's near about 4 p.m. Around the end of the PM session. So this is today's candle. Just look at all of this candle. You will see this is an expensive candle. Okay. Now in Tuesday, basically what should your expectation? You will mark Monday high and Monday low. Tuesday is actually the manipulation day. Not always, 90% of the time. If you think that some concept is going to work 100% of the time in this market, then you are in a delusion. Don't think like that way. Nothing works 100% of the time in this trading journey. 90% of the time, 10% of the time, it's gonna be little different. Okay. So today's candle is different. Why? Because Tuesday is actually the manipulation day. Over there, if your weekly bias is bearish, it will take Monday high. If the Friday high is very near to Monday high, then it will take the Friday high as well. If there is some kind of relatively equal highs above the Monday high, it will take that that relatively equal highs. Then it will go toward the Monday loop. Okay, toward the Monday loop. This is called manipulation. This is how you will frame your trade in Tuesday. Except of these things, whatever you will get in that chart, you are not going to participate in that price action. Now, why it happened today? There can be a lot of reasons, but so far I can explain why I didn't get the manipulation today. Instead of the manipulation, why I have got that expansion. The reason is tomorrow, Wednesday, we have a holiday. That means we can't trade after 1 p.m. and Thursday is actually real holiday. So the two expansion day, Wednesday and Thursday, is actually the expansion day. Those two expansion day is almost closed. Market has no way to expand around those days. That can be the reason for today's expansion. When I have seen this expansion, I'm just unable to frame the trade because it didn't work with my expectation. Because I knew that today is gonna be the manipulation day. It didn't do the manipulation. I'm out of this market. At the same time, I will show you even if this price action you are able to trade. I'll show that when I'll be in lower time frame. Let's go step by step. Okay. So from here, all you know that market should take Monday high, then it should go for the Monday low. That is called the manipulation. Now over here, this is the expansion. It is reaching for Friday high. That high is actually the Friday high. I don't expect that market is going to take that Friday high because it's too far from Monday high. But it is going over there, so far I'm just thinking that market is going to take that high. Okay. Let's go to lower time frame. That means a little lower. Okay, so hourly chart is my second time frame where I am interested to explain the price action. So from hourly chart, all you can see is market went lower, trade the mean threshold of that order block. Okay, so this is my hourly bullish order block. This is the opening of that order block, high of that order block, and this is the mean threshold of that order block. Price tapped this mean threshold perfectly, rejected from there, went higher. When market was going higher, I was looking for this parallel gap. So over there, this was the parallel gap which has been traded yesterday. It's a very small parallel gap, but which has been traded yesterday. So I was expecting that market is going to take that high, then it is going to fall. Yeah, obviously it can fall from the parallel gap over here. There is also another parallel gap from hourly chart. It could fall from there, or it can just take the Monday high. This is the Monday high, and then it could start to fall. That was my expectation. First I was bullish, Then when it has taken the high, then I would look for bearish. From hourly chart, I really don't have anything to say, but instead, before going more lower time frame, I would love to say that this is the entry parabolic gap from the hourly chart. This is the last parabolic gap. Still now, it can trade that entry parabolic gap consonant crosswind because previously it has been rejected from the low. So now this time it can reverse from the consonant crosswind, then it can fall, or it can reach until the last parabolic from the hourly chart. We will see that tomorrow. That means tomorrow's live session, I will explain tomorrow's price action. Today I'm just interested to explain this move. Now I'm going to 15-minute chart. Trust me, this is the starting of the learning price action. Okay, this is the starting of learning price action. Start to look this part very carefully, very carefully. I'm going to remove these two parabolic from hourly chart. That parabolic from hourly chart because I have now 15-minute parabolic. This is the parabolic first, which is above this relatively equal highs. So over here, I had this relatively equal highs. This high, let me mark it actually. So that high and that high, they are relatively equal highs over there. Okay, so that was my first buy side liquidity. I was thinking that market is going to take that high, trade this parabolic gap, then it will fall. In that type of situation, it should not work with the upper portion of this parabolic gap. So it should fall from there and it should keep going lower until this parabolic gap from 15-minute chart, or maybe it will go for this relatively equal lows. See this low and that with their relatively equal lows. That was very clean, relatively equal lows over there. It will go for that sell side liquidity. That was my expectation. First around 9:30, market expand higher because we had Fed Chair Powell speak. After Fed Chair Powell speak, market went higher and then it has been rejected from the consonant crosswind. See, market fall again. This is the bullish parabolic gap from 15-minute chart. We remove this one. From 15-minute chart, that was the bullish parabolic gap. It tapped to this bullish parabolic gap, went higher again, above this parabolic gap. Now, if I go to 1-minute chart to explain this small price action first, so that it will be easier for you guys to understand what was happening around that area. So this line is that buy side liquidity I marked from 15-minute chart, relatively equal highs, which is above the Monday high. When market has taken that buy side liquidity, it has been rejected from the consonant crosswind. Here, this price action I would love to avoid. The reason is this is just after the Fed Chair Powell speak. So after the Fed Chair Powell speak, market always start consolidate, and that was the perfect consolidation. I don't want to participate in that price action. I was looking for sell, so I don't care about the buy move. So there was a buy move. I don't care about that. Then market fall again and went through this parabolic gap. This parabolic gap. Market went through that parabolic gap. When it went through that parabolic gap, so let me show it to you. When it went through that parabolic gap, that was my entry parabolic gap from 15-minute chart. This is the last parabolic gap. So this is my entry parabolic gap from 15-minute chart. I'm going to remove this one because market has been broken over there. So it tapped to the consonant crosswind of that entry parabolic gap over there. After tapping over there, market can fall now. Okay, if market would love to fall from there, I took that entry from my live around that area. I was looking for sell. I saw that market has been rejected from the consonant crosswind. I was very happy. I don't need any 15-minute bearish parabolic gap. All I need a lower market structure shift. Now over here you can see there was no lower market structure shift. Okay, the reason I don't have the lower market structure shift, I'm unable to frame the sell setup from there. I took that entry depending on another thing, and that is consonant crosswind rejection, lower rejection. Market went lower for some kind of relatively equal lows, or maybe until this last parabolic gap from 1-minute chart. So I'm just not interested to explain this sell setup because that is not valid. You should not take that on. There was no lower market structure shift. But if there was a lower market structure shift, you are good to go to take that sell because market was reversing from the consonant crosswind of that entry parabolic gap. If market reversed from the low of this parabolic gap, the way it has reversed from there, here, from the low. Okay, In that type of situation, you can't frame the sell setup. You have to wait for a bearish 15-minute fair value gap. So when market fall around that area, market perfectly fall, it has made a bearish fair value. Look at this bearish fair value gap. It is reversing from the entry fair value gap. So here, not that run. It was reversing from that entry fair value gap. That was your bearish fair value gap. What was my expectation? Market is going to fall. Why it should fall? Because today is manipulation day. Market has already taken the Monday high. Now it should fall for the Monday low. Okay, that's why I was expecting that market will fall. This bearish fair value gap should hold the price and then it should fall. What happened over here? When it appeared over there, you are in your 1 minute chart and you will start to look for your sell setup. What happened? Market reached until the constant crosspoint of this bearish fair value gap. Here, this is that bearish fair value gap. It tapped over there. Was there any lower market structure shift? No, there was no lower market structure shift. Just look, there was no sell setup. If there is no sell setup, are you going to take the sell? No, you are not going to force the market and you are not able to take the sell. What happened then? Then market closed above this entry fair value gap. I'm going to remove this one because market never come back again over there. I don't need to explain that one anymore. So when market closed from 15-minute chart above that entry fair value gap, what should be your expectation? Market is reaching for that last fair value gap. The way I explained the fair value gap, if you have watched that fair value gap video, you know that if you are looking for sell, then market has to work with the lower portion of this fair value gap. But when it will work with the upper portion of the fair value gap, or if it can close above the entry fair value gap, that means it's broken. This fair value gap is broken. Market is reaching for the last fair value gap. So you know that market is going to fall, but it should fall from the last fair value gap because this entry fair value gap failed to hold the price. So this is the first time when market failed. This fair value gap failed to hold the price. Market come back again here to that. Look at this candle. Okay, why did it came to this instant bullish fair value gap? At the same time, entry fair value gap is working now as a inversion fair value gap. What do you know? That market is reaching for this last fair value gap. Now you are able to look for a buy from here to here. Your range should be above this fair value gap to until the low of this last fair value gap. Okay, until that area. If you take a closer look over here, market went lower, take all of this liquidity. Okay, all of this liquidity has taken. At the same time, maybe you are going to mark this one as your lower market structure shift. Lower market structure shift. So market has taken the buy side liquidity. As you know that you are looking for sell. So you can see this one as your lower market structure shift. But this is not valid. Why it's not valid? Because this entry fair value gap even failed to hold the price. And this setup is creating to the top of this entry fair value gap. You can't look for the sell from there. If you would love to look for a sell, the setup should create to the lower portion of this entry fair value gap. If it create to the upper portion here, you are not going to look for sell from there. This is the part you have to understand perfectly, because most of the people, they think that okay, and maybe I can go for sell. For example, even if market fall from there by that setup, specific that setup, okay, I'm just saying that this is, you are seeing this market structure shift, lower market structure shift. This is the fair value gap. So you will take your sell from there. No, you can't go for that. Even if market fall, I don't care, but you can't look for sell from there. Okay, because this is the upper portion of this entry fair value gap. Here from 15-minute chart, it is the upper portion. You can't look for sell from there because now this resistance fair value gap is going to work as a support. It's a barricade for you. Instead of that, you should look for a buy until the low of this fair value gap. Look at this run. After taking this liquidity perfectly, market went higher, gave you the market structure shift. This swing high is actually the all-time high. Very higher high. Also, it has a swing high on its left, which is lower than that swing high. A swing high on its right, which is lower than that swing high. That is the market structure shift. And there is your entry fair value gap. Let me mark the entry fair value gap. This is our well-known setup. Okay, over there, this is the entry fair value gap, and that is the breakaway gap. So over there, that is called the breakaway gap. You will take your entry to that entry fair value gap around that area. Your stop loss will cover the breakaway gap. Okay, the breakaway gap you will cover, and your target should be the low of this parabolic gap. If you have more than one contract, then you can take a partial to the low and you can hold your trade until the consolidated crossment. If you have more than two contracts, then you will have to take another partial over there and you can hold it until the last line of that bearish, that last parabolic gap. But I really don't want to do that. Instead of that, I would love to say, if you would love to take that entry, you have to take a partial when it will tap to the low, and then you have to close your trade when it will reach to the consolidated crossment. Now, when market is reaching higher, I'm not thinking that market is going higher. Okay? Yeah, it went higher. I will talk about that later. But you should not think like that way, that market is going higher. Instead of that, you should keep thinking that market is going to fall from that last parabolic gap. Okay? You are thinking like that way. That's why I am not interested to take that buy. I am not influencing you to take that buy. Instead of that, you should avoid that buy. And today you will be maybe entryless. That means you are not going to take any kind of entry today. This buy is valid the way I explained the price action. When the entry parabolic gap is broken, that means you should think that market is reaching for that last parabolic gap. When it will reach to that last parabolic gap, then market will fall. You will think like that way. But at the same time, when you are looking for sell only, don't participate in that buy run. Is that buy valid? Or absolutely this is the first buy which is valid. Over here, this buy is not valid. Here, market has taken the liquidity. Maybe this is the market structure shift. Price came to this entry parabolic gap. This is the breakaway gap. Market perfectly went higher. No, this entry is not valid. At the same time, this was inside the lunch hour. It's not valid. Here, there was no buy setup. All of this price action is the messy price action. Over here, you have no way to trade around that area. You have just no way to trade. This is not a clean price action. You can force the market to build some setup. For example, maybe you can say market has taken this liquidity, then that was your market structure shift. Maybe you will say that this is, I'm going to take the entry from that last parabolic gap for the buy. No, it's not valid. This whole price action around the morning session is not a good price action to trading. Okay, so this is the first time where there is an opportunity by using the fair value gap concept with the price action to go for the buy until the last line of the fair value gap. When it reaches to that area, what I will start to look, I will start to look for sell from the lower portion of the last fair value gap. I will start to look for sell. If I get any kind of sell setup, I'll go for that. But look at this price action. After from around 2 p.m. to until this area, that means 3:50 p.m. This is the whole price action. That is the messy price action. Absolutely bullshit price action. Okay. I'm sorry for that word, but to be honest, this is not a good price action. There was no sell setup. There was no buy setup. Can you look for a sell from there? No, you can't look for a sell from there, because either way, this is above the last parabolic gap and the last parabolic gap is broken already over there. So market has broken the last parabolic gap. You can't look for any kind of sell setup from the upper portion of this last parabolic gap. Yeah, you can look for a sell setup if market come back again below this last parabolic gap. Maybe one candle closed above this last parabolic gap, the very next candle come back again inside this last parabolic gap, which is called the fake breakout. Then market make a bearish parabolic gap from 15-minute check. Yeah, you can go for look for a sell setup then. Otherwise, above here you can't look for any kind of sell. Can you look for buy? No, yeah, obviously you can look for buy because the last parabolic gap is broken. But look at this price action. There was no clean price action, nothing. You can't say me that after taking the liquidity, perfectly market has given you market structure shift, something like that. See this clean buy setup? There was no clean buy setup. Never. So this whole PM session, there was no opportunity to trade. There was only one buy setup which happened around that area from actually around 2 p.m. So 1:30, 1:40 or 45 p.m. around that area. There was only one valid setup depending on the price action, depending on the fair value gap, the way we use the fair value gap. If you don't understand how to use the fair value gap, you can't trade. Okay. Now, why I make this video? The reason is I was expecting that market will fall and it will take the sell side liquidity. Instead of that, it went higher and it made me perfectly wrong today. Am I upset of that? No, I'm not upset, because that is something which doesn't happen all the time. 90% of the time, Tuesday is the manipulation day, but today is exception. So that it is today is actually inside that 10%. And as I told, as tomorrow we have a half day trading, and the day after tomorrow is the holiday actually. That is why it can expand like that way. Okay, because of that reason. I don't care about that. When market is going against my bias, I'm not going to touch that. At the same time, I will only look for sell, and you can see there was no sell setup. Nobody can mark any kind of sell setup. No sell setup. Here, all of this area, this is very messy price action. I was in live. I told that after Fed Chair Powell speak, always expect this type of messy price action. So this was whole consolidation. I didn't do anything over there. I was just watching the price, and finally there was a setup depending on the fair value gap. The way I used this fair value gap for my buy, because it was broken, I would look for a buy until the last fair value gap. Same way I frame a sell setup around that area, constant cosmetic rejection, lower rejection until some kind of liquidity. Okay. So that was the price action. When it went against my expectation, I am not interested to participate today. Every day is not for trading. The guys who are new to ICT trading concept, they only want to see the perfect price action, the perfect setup every single day, where ICT himself told that every day is not for trading. The people who don't understand this, and they actually get very panicked by that type of things, and they want to take entry every single day, trust me, they are not going to be profitable, because they don't understand the real premises of this market, and which is every day is not for trading. In my opinion, today is not for trading. I only see this clean buy setup over there depending on the fair value gap, and I just can't hold my trade for so long. The reason is I know market is going to fall. It didn't fall. I'm okay, perfectly okay, because market never give you the false signal. Market is not going to make the trap for you if you know how to use the fair value gap. So this is why I'm just not getting inside that market. I just let everything go. So guys, I hope that it's gonna be little insightful for you to understand the price action and how to use the fair value gap concept, and how you should look for the trade, and how you should think what is going to happen. Like, we are not the retail trader. We don't act after the price action. That means market is going higher, so we are going to act after that. No. First we expect, or we actually predict the price where it is going. Then we participate into the price action. That means we are going to anticipate the price. We are not going to react with the price. Instead of that, we anticipate the price, what is going to happen. If it is not giving you the price action toward your anticipation, then you will avoid the trading. This is simple logic. So make sure that you understand this part. This is all about psychology and the price action. If you really understand it, don't forget to give me the thumbs up and subscribe to my channel. Okay. So until the next video, cheers guys.